Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. And the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Today is the day. CPI coming up here in about 8 minutes. Let's go through the charts here. Well, let's turn on some music first. I'm gonna keep it really nice and peaceful today, all right? Because we're gonna have a stressful trading morning here, I think. Going to the charts, volume profile, 10-year treasuries. Well, pretty much unchanged from yesterday. We are maybe like 2 basis points higher in yields on the 10-year here. I see a possibility for a steepener to come through here on this news, so keep an eye on that. S&P 500, a little bit of a downturn yesterday, but recovering it overnight, nothing too significant. It does look like the market is mostly, there you go, oil moving sideways here, waiting for this CPI news. Gold and silver still look, positively tilted to the upside, and then you got Kappa looking okay. So I guess things in China are okay. And then we'll come back over to the dollar and the Bitcoins. And see the dollar falling a little bit here. Actually, some intraday lows, not quite as low as it was off of Friday, but here coming back below 106, 105.75, and Bitcoin coming back a little bit yesterday as well. So that's our setup. Let's come over here to look at the consensus expectations. So the US CPI month over month is expected to be spot 2. Now remember, that is the number that includes food and energy. The core CPI month over month is expected to be spot 5. So here's the scenario that I see playing out that could end up being really confusing, but provide a lot of opportunity for us. What if headline CPI ends up being spot 3 instead of spot 2, but core CPI ends up being spot 4 instead of spot 5. In other words, headline CPI is a little harder than expected, but core CPI is a little softer than expected. You could get, so core CPI tends to be more predictive of inflation in the long run. And a drop in core CPI could be really, really good for stocks and risk assets. But a lot of people pay attention to that headline number and might misread the initial thing. So there could be some confusion here. But if that happens, if listen, I don't know how likely it actually is. I am gonna put it down as my base case, but that's an awfully specific case to have come through, right? But if it does happen, we want to go short 2-year yields. Oh man, it could be a great steepener. Okay. Just note that is exactly what the yields what the treasuries are doing here on the open. People are buying the short-term treasuries. Okay. How are you guys doing? Shall we do a poll before? Poll is up. It's so peaceful, guys. That's what we need, is you just relax and just say, oh, universe, I am so ready to make so much effing money off of this CPI. Are you ready? That's what we're going to do. I think that's what we're gonna do. You know what? I'm kind of feeling. I know I got a much better night's rest than I did yesterday, and I'm feeling a little aggressive. I'm gonna have to watch that a little bit. I might have the tendency to be a little bit too aggressive on this move. Hopefully something clear. Well, I mean, if it's the scenario that I laid out, it could be really confusing at first, but I think that the way that it sorts out is actually really easy to set up, right? So a little confusion could actually work in your favor, right? Liquidity is a little messed up in the 30-year here. Okay. Somebody's buying the index, man. Hey, Lambert, you got the book? Dude, have you read it yet? I mean, the first time I opened the book and I started going through it, I was like, this is a little intimidating. There's a lot of math in this. You know, I got the next. Well, I have a stack of books here. I'm reading something about data engineering. This is a local guy here, Joe Rice. He's here in Utah. He wrote this book, so I primarily got it for him, but it's kind of along my industry, so I'm reading it more for work. And then I got this one that Ash K recommended for us. This book is intimidating, man. It is nothing but calculations for complicated financial instruments that I've never heard of before. It's a lot. Yeah, what kind of math is in that book? Like real analysis stuff? Well, so Sharp and Goose, what the book mostly is models for market microstructure. So there's a little bit of calculus and statistics involved. And then they show you how those models perform compared to the market data and so forth. It's quite amazing. Okay, well, I was hoping that maybe I could trade this, but if the 2 years not going to have any orders out there, I think I'm just going to have to wait and see what they do. Okay, here comes the number. Oh my god. Oh my god. 0.3. What? Oh my gosh. This market is going to explode. Oh, we can't trade it in the micros. That sucks, but holy shit. Woo! I'm a little excited here, guys. This is like the best number you could possibly get right there. Spot US core CPI spot 3 versus spot 5. I am not going to take a trade over here in the micro treasuries. It is just going to be, oh, wait. I don't believe, oh, no. That's not right. Didn't have it on the right, what did he just... So I could put a limit order there. I don't think that my DOM is actually like... I don't think that they're giving me live data. Yeah, see, I put that order. I doubt that it fills, but... There is no way. There is no way that just filled me. What the fuck? Okay. Dude, the 2-year is going to get slaughtered here. Okay. I don't believe what this is actually showing me. To be honest with you, I don't believe what this is actually showing me. But okay. Apparently, there was somebody sitting there with a bid at 3.2 and I hit them. Because nobody wants to trade the 2-year. Well. Ooh. Okay, so the pullbacks on the treasuries here are quite extreme, but let's come and read the full report. Well, this is going on, and I'm doing something that seems crazy. Okay. Ooh, I'm super nervous about this now. Okay. Consumer price adjusted for all urban consumers was unchanged in July on a seasonally adjusted basis after rising 1.3% in June. U.S. Bureau of Labor Statistics reported today over the last 12 months, the all items index increased 8.5% before seasonal adjustment. Yada, 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 yada. Okay, so when we come in here and we look at July, okay, food was 0. Energy was negative 4.6. Wow. Then we come down into all items, less food and energy. Spot 3. Wow. Commodities, less food and energy commodities. Spot 2. Okay, new vehicles was actually not changed much. Used cars and trucks, though, came down quite a bit. Apparel came down. Medical care commodities still high, so that is a little bit of a concern. Shelter was spot 5 versus spot 6, so that's probably where some of it's coming from. Transportation services and medical care services. Man. Okay. So it was just, man. I don't see anything in there that is like, oh, wait, hold up. That number is a little fishy or anything. That was clear. I know, right, Kevin? Well, I still kind of would prefer something that's kind of like a little fuzzy, just because that provides more opportunity for us. I mean, look here in the micros, it's almost impossible to do anything. I'm surprised that anybody has bids out. Like, what? And I really were not sure what's going on here in the 2-year. It looks like I am indeed in the money, but there's not any bids down until 3.9, 3.09. Like, the thing is I took that and I'm like, there's no way that that's real. My DOM must not be updating. They must not be updating my data or whatever. I hit it with the limit order. It tells me I took it. I guess I could check this real quick. I'm gonna make sure that I don't have this set up to like show you no. Yeah. No, it says that it was filled. So I don't know if that was
Block sell.
legit, then okay. Now that's interesting. There was a 9K bid at 120.14 and somebody sold it to him. Well, that was probably profit taking, but man, oh man. So is the Fed going to stop hiking rates? I don't know. It might. It might. Yeah. They're a little bit high here in the micros. In the micro 2-year still. Ooh. One of the things that we got going on now is that was such a massive move. What are the chances that continues through? Not sure. let's just note that there was a 9K here at 120.14. That might provide a good location for you know, a benchmark. Yeah, the 2-year yield over here on the in the micros are about 2 basis points too high. I suppose we could say that that is the basis difference, but oof. Anthony Crudelli says, "Don't let your hidden bias get in the way of you executing what is happening." I think I understand why he's saying that, because, you know, it's so interesting thing happened to me yesterday. Well, not interesting thing, but some guy had a chart that was, oh, this is what happened in 2008, and it looks like we're tracking 2008 really, really well. So I told them the story about, you know, after the pandemic when Zero Hedge was doing this with the Great Depression, and like eventually the chart stopped matching and they just stopped talking about it, because the scenario that they laid out about us going into a Great Depression never happened, right? And so a lot of people thought that was funny and liked the video. The video did really well. But a bunch of people came in and were like, okay, yeah, but the Federal Reserve's not going to save you this time yet. Like, it only did this because of the Federal Reserve. And I'm sitting here like, okay, so the chart works except for when the Federal Reserve does something? I don't understand what y'all trying to say. But it just, I got this whole thing that it was like there's these people that are just really dislike what the Fed is doing, right? And I think that it can lead them to poor trades, because clearly the trade here was long the S&P 500 and short yields. You couldn't have gotten a better print at a time when everybody is hyper focused on it, right? And these guys that were pushing against me in there, of course, I was not trying to make a call on the market overall. I was just trying to point out that that chart is not effective at all, that what they're relying on is a complete fallacy, right? That's all I was saying. And but in the end, they would have made the wrong trade if they were going off of what they were saying yesterday. There was this one person that was like, so why don't you go long then? Well, I guess we'll show them. I guess we'll show them today what we did. Well, I'm not going to look yet. Let's let things calm down a little bit so that we can kind of see the data and everything. But it's going to be really interesting to look at the FedWatch tool after today, huh? Yes, sir. Okay, well, I can see yields are approaching new lows. The treasuries are still a little bit off from their highs, though. And we did also, by the way, man. Okay, what was the headline number, by the way? I didn't even notice. Oh, wow. The headline number was 0 versus 0.2. So we didn't get the scenario that the exact scenario that I was thinking about, but we still got the steepener that I warned you about, right? Oh, it steepened hardcore, in fact. This is all very interesting. S&P 500 just slowly edging higher. It's always funny. The experience that I'm feeling right now when you take a trade and it's like, wow, how is this working? You know? And I'm like that little puppy that caught the car, right? No, oh wait, now what do I do with it? There's no liquidity to exit. Nobody's selling it. Right? There's just no volume over in here. It's hilarious. Well, they were heading on the up, but they're rebalancing back around. They might just, there seems to be, maybe there's a little bit of they want to rotate around 16, but there's also that big old 14 order in the 10-year. It's like the 30 years kind of been catching up, but the 2-year definitely went the furthest there off of the initial thing. S&P 500 did not hardly had a pullback at all. Man, where can this go for stocks? Oh man. So we're still only, okay. We spiked just barely above the jobs report numbers. But oh no, wait, that's a 10-year. I'm looking at the wrong thing. Stocks are out of here. Oh yeah. Okay, so let's say 4205, 4200 being the critical level. I wonder what the gamma is. Could a move above 4200 trigger some extreme gamma, some extreme options positioning? Yes, caught bear red-handed and didn't even dip. Yeah. What do you think is going to happen when the S&P 500 actually opens up? I cannot. The last piece of economic data that I think is comparable to this was way back in like April of 2020 when they thought that the jobs number was going to be negative and it ended up being really positive, right? And that one, I remember on that one specifically, like the S&P 500 took a good jump, a good initial jump, and then it just kind of died and we were like, well, okay. And then after it opened up, it just nothing but trended, right? So that is a possibility here. Yeah, all they have to do is close above 4,200 on the daily 3 days in a row, and everybody will believe in the new bull market again. There's a lot of pessimists out there, man. I mean, the thing that's kind of funny is that all of the economic data that we just got is in line with the Federal Reserve's best scenario, right? Inflation appears there. This is a strong data point in favor of inflation peaking, and the jobs market is strong, apparently, maybe too strong to some extent, but everybody is going to be buying the S&P 500, not because all of the economics are strong and everything's going exactly the way that the Federal Reserve is going, but because the federal monetary conditions will be easier, right? They're buying because monetary conditions will be easier and not because the economy looks fundamentally strong. This 15-minute candle right now has more volume than well, of course. CPI is the next best thing after FOMC days, which chop first. Well, I can remember for a long time, man. Of course, for us in treasuries, CPI is always an important number, and we always got good news or moves off of it, and the equity markets would just kind of ignore it. It wasn't until 2021 that everybody started paying attention to CPI, right? So it's still a little bit weird to me to see this as like a significant thing for the markets and big moves off of it. I'm just kind of sitting here like, oh, yeah, okay, so those things do matter, actually. Maybe y'all should have listened to the bond traders instead of these yahoos over in stocks. Let me tell you what. Almost every major influencer, and when I say like influencer, I mean like people with a following, because honestly, I'm small cookies, right? But like all these guys that are big on Twitter, like Anthony Crudelli and Future Trade, they're all smart. They're all really good. I think that there might be some things that I know that they don't, but generally speaking, like these guys are real traders and they're really smart, right? Then I go over to equities, and there are so many influencers giving, running discords, and we having huge followings on TikTok and everything for stocks. And these guys are completely clueless. Every single one that I've come across, they're just completely. So this guy that I stitched yesterday, I'm not trying to bully him. I was just like, this is a good opportunity to point out how dumb this kind of a chart is, right? But he makes it too easy, and he comes back and he starts arguing with me about it. He's like, well, yeah, but the Federal Reserve this and that. And I'm like, oh, wait, so you mean current financial conditions are more predictive of where the S&P 500 will go than your chart is? Well, listen, I mean, I'm welcome to debate you here, but if you're just going to debate yourself, then have at it. I don't need to do anything, right? You're just showing to us that the thing that you were making a big deal out of doesn't matter, right? And he comes in and he's like, you seem so ignorant, and I'm just like, yes. They must not like come in and look at my other content or something. I was like, okay, but you're talking to a person that specializes in the interest rates market, has been doing this for years, over a decade really now, if you count how long I've been just in the industry in general. And I'm feeling these days pretty confident about my understanding of the economic numbers and stuff. And meanwhile, you, sir, are posting a bullshit chart that means absolutely nothing. And you're saying I'm the ignorant one. Well, like, just stop. Just stop. You have no idea how dumb you're making yourself look. It was a good one. I'm a little excited. One of the things that excites me about this move is that there was this one guy that was like, well, if you think that it's, if you don't think that's true, then just go long. I wasn't making a call on the market, but I'm going to go back and I'm going to take a picture of the comment, and then I'm going to show a chart of today. I'm going to be like, number go up. Hi, Seth. Do you have the knob spread indicator? Look, how does your indicators work? Okay, so I do. I have a knob spread. I have it on my chart over on the far bottom left of your screen. It is 5ZB, or no, 5ZN minus 2ZB is what it is, and that's how you get the knob spread. And I've been working on the indicator. Actually, I don't have the newer version of it on my chart here, but I'm kind of combining everything into one indicator, and I'm adding a couple of features because there's all sorts of interesting things that happen with spreads when you try and put it on a historical chart. So I'm giving you more options to decide how you want that displayed. And I really feel like, listen, okay, I use charts, I don't use technical analysis, okay? But I don't understand how anybody trades, especially trades the bonds, without these spread charts to be able to see how two assets are performing relative to each other, right? Well, I'm seeing these yields come back here. It looks a little extreme. When I look at this market, they're at 1.3. Okay, which is about where they're at, so I think that's okay. It does make me wonder if the treasuries could reach the high much later today. Some people are trying to call the top of inflation, which to me is as futile as picking the top of a market. You might be right about that, Mr. Bond. Obviously, right now, today, the print that we got is very, very much in favor of inflation has peaked. Okay, and this is not flow that you want to stand in front of, because you could not think of a situation where more people are interested in an economic number. And so not only do you have a lot of eyes on it, but the number surprised in a big way, right? So you don't want to stand in front of this flow. But I do think you might be right, Mr. Bond, that in the long run, it's still possible that, you know, a month or two down the line, you start getting hot CPI prints again. The inflation may be a little bit more persistent than you think, and it's probably not enough to just look at one print and say that it's all over. But well, we're gonna have to look at that FedWatch tool. But you know, some of us were thinking, okay, so like right now we're at 2.25. Some of us were thinking 75 basis point hike, and that would take us to 3. And then if another 2 further hikes would take us to 3.5. Okay, well, if they only do a 50 basis point hike, then that would take us to 2.75, right? And then maybe a 1 basis point hike after that. You know what I mean? And who knows, if the prints really cool off, maybe this next hike is like the last one. Could be the case. And in that instance, is there really a justification for the 2-year yield to be above 3%? That's kind of what I'm thinking. This is going to have to steepen back out considerably. Because right now, what it looks like is that the Federal Reserve was trying to jawbone the interest rate market lower at exactly the wrong time. Like the Federal Reserve is probably looking at this number and being like, oh, okay, everything's fine, guys. We're all fine here now. You know, no need for the code red anymore. Feds did their job, yeah. Is that 8.5 way above the Fed's 2%? Well, okay, so I think that people have kind of well. So, of course, if you are a bond holder, right, and you're getting 2% per year, and inflation is 8%, you lost money, and you don't like that. Yeah, bondholders lose money in that instance. That doesn't mean that the yield has to come up to what inflation was, right? So number one, what the federal funds rate and where the neutral federal funds rate is, as far as I understand, doesn't really change. R star doesn't really change based on inflation per se. Okay, so a restrictive interest rate is still somewhere above 2.5, right? That doesn't change. Okay, so the Federal Reserve getting to 2, that's enough to slow things down, right? But yeah, they don't have to get up to 8%. That just means that bondholders lost money, and that's to the government's benefit, right? Listen, the money has to come from somewhere. I'm not saying that the Federal Reserve did all of that on purpose, but that's what happened. Type 0 FF in icon, big shift in Fed funds curve forward towards numbers. Okay, let's try that. 0 hash FF 30-day federal funds rate. I'll just click it here and give me a thing. Oh wow, yeah. The change today was a lot. But right now they're at 96. I don't understand the numbers that I'm looking at right now. It was about if assuming that that's a percentage, I don't know. I changed 0.14. What's your thoughts on Martin Shkreli? He's doing live options trading from time to time on YouTube. Well, I didn't know that he was doing live trading now. I don't know. He does seem like he knows what he's talking about. He's taken some excessive risks, but I wouldn't think that he would be able to even, he would be allowed to trade. Marting shorting Sega, still he down 7K. Jeez. Well, these yields still kind of coming back. I think it's possible that later in the day we could make another move, but for now it's just kind of chilling off. And the net, well, I think that what part of what might be going on here is that it did seem that over the past day that traders were actually positioning themselves for a CPI that was under expectations. So when I look at the cumulative delta and everything, there's a lot of selling through this after this move. So probably a lot of profit taking here, right? No, well, no, that's not what happened, Axelrod. So, I mean, he did do that. That's true. But the reason that he got put in jail was because he had some sort of a fund, and he had bet the funds big on something and lost all of the investors' money and basically covered it up. And they found out. But then by the time everything had resolved, he had made all of their money back. So that's kind of the funny thing about it, was that in the end, his investors didn't lose any money, but he did commit bank fraud in doing all of that. And that's why he ended up going to jail. I don't remember all of the specifics, but I'm pretty sure that that's why he ended up in jail. I don't know. Here's the thing. I really hate taking a position on people. You know what I mean? Like some people are good guys. That doesn't mean that they're always going to be correct about things, right? Sometimes they make bad decisions and stuff. Especially when you're talking about somebody like Martin Shkreli, you're kind of walking on thin ice, like endorsing him as a person, right? Or like the big thing going on right now is Andrew Tate, right? I mean, he's hilarious, but do I want myself to be associated with him as a person? Probably not, because in the short term, you might benefit from it because he's the big name right now in social media, right? But that doesn't mean he's always going to be on top. And what if he does something dumb? Or something happens and he falls from his throne per se, right? And you attached yourself to him, right? Remember a long time ago, KBIO stock. Not sure if it was a pump and dump stock, if I say so. Also, yeah. Well, I mean, this is one of the things that I really hate about stocks is that when you get in, well, you look into a lot of these channels and stuff. A lot of it is stocks that you never heard of before, right? Well, that is coming back quite aggressively in the 10-year. I kind of feel like it's maybe a bit too much, but like I do think that in this situation, we've kind of got to take the longer view of it. Sometimes after a move like this, though, well, one, you'll get a really big move, right? But number two is sometimes you can get something in there that you know people missed or something like that. Stocks, bonds, and gold soar as sliding CPI sparks dovish dump and rate hike odds. A colder than expected CPI print driven by slowing energy price gains offsetting continued gains in shelter costs prompted an immediate knee-jerk reaction, sending rate hike odds tumbling. September went from pricing an 80% chance of a 75 basis point hike to around a 30% chance almost instantly. This prompted wild euphoria in stock because surely this means the Fed pivot is back on, and bond yields plunged, led by the short end and steepening the curve. The dollar dived lower, helping sending commodities higher, with oil spiking and gold futures up to $18.25. Just one thing though, as Jason Bloom notes, head of fixed income and alternatives ETF product strategy at Invesco, watch prices going forward. Good news for stocks and bonds, but watch commodity prices in Q4 and beyond when the SPR release ends and the Ukrainian harvest goes missing. No doubt CPI will begin to trend lower, but in the 2% in 2024 expectation depends largely on a flat to lower commodity price environment, highly unlikely in my opinion. But for now, the ammo for the squeeze or forced participation is there in stocks, says Zero Hedge. I agree. Doesn't mean that we're out of the woods, but it's a really strong number for today, and it's not a flow that I would want to get in front of. Okay, so the max MFE I've gotten on this so far was 102. Where they're at right now, it looks like, they're well positioned for another leg, at least in the S&P 500. 4,200 being the resistance at the moment. Good morning, NASDAQ killer. When was it? Well, today is Wednesday, right? I think it was on Monday. We're like, where's NASDAQ killer? We need him here, but I don't remember what we needed you for. Don't remember. Hope you're having a good morning though. Yeah, Treasury's still selling here. There's got to be some serious profit taking here. The volume might be turning around here though, so let's see, what are the liquidity conditions? Well, there's a couple of really big orders up here. Also, inflation has shifted from being majority energy related to more evenly distributed over all components while still maintaining. Gotta be interesting for sure. Well, I'm not sure if I agree with that. I think I would be interested to see you make the case, because it seems to me like the core component is just continuing to do what it was doing, right? So I wouldn't say that it was more evenly distributed so much as it was that energy inflation backed off considerably. But you got to remember that was it last month or the months before that, the CPI, where there was a couple of core components that were just really hot, right? So we went from 83% energy related to okay, well, I think maybe I misunderstood what you were saying. Like if I were to draw a picture, you would say here's energy related inflation, and here's everything else. That's what I think it is. And I thought that you were saying that it was like this, and now it's like this or something. $120.03. Man, if they are able to touch 120, that would be something else. But I think what you guys are saying is key. Well, okay, so here's why I think that this number is so important, though. Okay, it is the core inflation was significantly lower than expectation, right? They expected spot 5, we got spot 3. Spot 3 is what it usually is. Spot 3 is like exactly the amount that you want. And that was the core component, not the energy component. Of course, the energy component bleeds into everything else, okay? But the core inflation being spot 3 is really, really good. And that is more indicative of future inflation, right? So if we do get more inflation, or rather, if oil moves higher again based on what's going on in Ukraine, and here, if the economy starts to look more positive, I think you could see oil back above $100 a barrel very easily, right? Yeah, you will see inflation. It'll be the headline inflation number, but that core component might not be as bad. You get what I'm saying? So that's kind of what I think the market is thinking here right now. And, you know, if it's just oil, the Federal Reserve might not be as inclined to aggressively raise interest rates, because they're going to say, well, but the core CPI is still fine. So the last thing that we want to do is kill the economy just because of oil, right? Why is it that news moves pre-open slice through price like melted butter, and in the open like solid glass? Yeah, zero hedge oil can now surge because oil dropped. Yeah. Wait, is that the actual headline that they posted? Or are you guessing? Because you might be right. No, I don't see that. Oh, it was a tweet. I can't see their tweets anymore. They blocked me, remember? Okay, so treasuries have been middling around here a little bit. I'm kind of tempted to take another contract here. I think what I've got is enough. The liquidity in the 2 years is still pretty shit. So the 30-year has almost retraced the whole move, but the shorter end of the curve has been a little bit more stubborn. Wow. Through 120. Wowzer. Well, now with them below, well, okay, so 119.16 was essentially the price before the news, okay? So, you know, this is still just a pullback, and this was really extreme. It really was, right? So, I'm not gonna say yet that there's like something else going on, like some counterintuitive trade that flips this on its head. Was the first to vote in your survey, easy win? Well, oh yeah, we should end that poll. Did you guys vote afterwards? Because 60% of you guys said below. I don't know. I mean, I came in and I said core will probably be under expectation, right? Well, I didn't say probably. I said that's what I think is going to happen. I don't know how I make these predictions. I'm reading what other people are saying, and somehow I get an inkling for which way they're leaning and how that differs from what the consensus estimate is. It seems to me that the consensus estimate numbers that we get are not a true reflection of what the markets are expecting. You know what I mean? You ever feel like that? Like all of the traders were expecting inflation to be on the lower side. Market's consensus estimate was 0.5 and ended up being 0.3, but all of the traders were long the treasuries before. All of the flow before that was long. So how do you explain that? Anyone want to share their successful trade on that economic news? Well, I did get a good trade off of it. It's not over yet though, so let's just kind of see what happens. The thing that I'm worried about here right now with the treasuries is that, like, yes, I do believe that 2-year yields are set to drop considerably here, but that initial move was so insane and there's been so much profit taking off of it that it's pulled back really dramatically, right? Yeah, you've lost. Yeah, oh, I mean, that's what makes trading these sorts of things hard, right? Is that I can almost what is the right wording to use here? I feel very confident that the 2-year yield will drop back to 3%. I feel very confident that the 2-year yield will drop back to 3% and below. But that might take days to happen, right? Like the thing is like you might know where it's going in the longer run, but in the next 5 minutes, it could go like $100 against you, right? on a micro contract. Because if you had bought the treasuries up here at the highs, right, wouldn't have been too pretty. Well, actually, it was about what, a $50 pullback, 6 to 82, so $60 pullback, right? I just these are so hard to trade, they really are. It'll be interesting to see if there's anyone selling the good news when we open. Well, yeah. So in the treasuries, there's a lot of mean reversion behavior. And so you're always going to see people willing to provide some liquidity in one direction, right? Because I could come in here and I could sell the 10-year, and I just have to buy the right side over here to be on the right side of the spread, right? And I can still provide liquidity for it, right? S&P 500 traders kind of know that, like, when it's going up, you don't want to stand in front of that, right? So they're much less likely to fight that sort of a thing. If they do fight it, though, let's try and game out what might the reason be. If you were to fade this, one you could say, well, inflation in the longer run may not actually be over. I'm not sure how you would make a trade on that today, but okay. But another thing that you might say is that markets are going to get really bullish and enthusiastic about this. And, you know, that could actually be to their detriment in the long run, right? Like, I think the S&P 500, yeah, for sure go higher. But, like, if we come back to a daily ES number, right? Okay. So above 4,200 would be like a big win. I've always kind of felt that below 4,150 or so was a little bit overly pessimistic. Okay. But, like, let's say they start getting above 4,300 might be the point at which they start to say, actually, this is a problem. Stocks are doing too well. You know what I mean? Yep. Buy the long end and sell the short. That's 100% what's going on, right? Well, so come and look at these charts over here. Sorry, I wasn't even showing you what I was on day ES. 4,300 is that critical point. But if I minimize that and you just look at the order flow on here, okay? All of them show cumulative delta dropping, right? But the 30-year came back much more significantly than the 5-year did. So what's happening here is people are putting on a spread trade, right? They're buying the 2 and 5, they're selling the 30 and 10. So that probably explains this order flow coming up here, right? But overall, it's been sell. So I wonder if they kind of take it at different points. Like, you come over and you sell the 10 and the 30, because you know that that's going to move the market down. So, and then you try and let it rebalance, and then you can come over here and you can buy the 2 and the 5 maybe. I mean, if that's really what's going on, that would be really beneficial for anybody trying to take advantage of the 2-year yields here, right? But we'll see what happens. Lots of people watching today. Well, I mean, not lots, but more than we've had here this summer because it's been kind of quiet. So I appreciate it, guys. Make sure you hit that like button. It helps the channel out a lot. And if you're new, make sure you subscribe and hit that bell icon because we've got some videos coming up about interest rates in the Federal Reserve and everything. Right? Well, we should change the title in here. Markets skyrocket on inflation backing off. That's what we'll put in the headline, unless you guys can think of a better tagline. Okay, so look right here. The 10 and the 5 moved up quite a bit there, but the 30 is still holding back. So you're still seeing the steepening. Okay, so here's another trade that I think you could probably pull off. Okay. I would rather do this in micro yields, okay? Sell the 30, buy the 10. The 30 is the 10 is too low relative to the rest of these on a relative basis. The spread between these two is going to come in. It's probably not as profitable of a trade as just going short the 2, but now one also has to wonder. Here's the other thing we should consider. Is this enough to make the yield curve uninvert? Like I don't think we're too far away for that to happen in one day. But let's say like by the end of next week, could the yield curve be uninverted? You know what the best part of this is? S&P 500 hasn't even opened up yet. This has actually been a long hour. My take is we're headed for a recession or the Fed breaks the economy because it overshoots. Well, but wouldn't this news make that significantly less likely to happen? So for that trade to work out, you'd have to have one of two things going on, right? Either one, the recession is already in motion and there's nothing that can be done to stop it. Or two, the Federal Reserve is going to ignore this economic news and continue to do the wrong thing, right? I have to think, though, that we're going to hear a different tune out of the Federal Reserve next time we hear from them. Well, I tell you what, liquidity over here is still very light in the treasuries, and they're able to wobble around quite a bit. So I don't think it would take very much for the treasuries to come back to highs, but at the moment it sure feels far away, doesn't it? Man, this has been such a fun day. I'm probably a little bit too euphoric about it, right? There's got to be something about what just happened that's bad. I've been traumatized too many times by the markets in the past. That like when a piece of news comes out, it's good. It's like, I don't believe it. You know what I mean? You made Monday? What do you mean by you made money? Well, not yet. I haven't taken profits on it. But I do have an open position that's doing pretty good. You want something bad, feel bad for those people swing short right. I'm going to make some fun of them so much on TikTok today. Oh, I have so much fun with this. Oh man. It just like of course when I made that video, I wasn't sitting there trying to make a call on the market because I know like, okay, CPI is coming. You don't necessarily want to take a big bet ahead of something like that because your ability to predict it is very, very low. But I was feeling yesterday, I think it was about halfway through on Monday was when I realized like, I think that core CPI might come in line or under expectations, right? And I kind of started to see the market start to trade that, right? So it was kind of sitting there in the back of the head, even though I wasn't objectively trying to make a call. But I'm just gonna run with it, man, because it's just so funny that so many people came in and were being so pessimistic about it. I know it's like you guys have no clue what's going on though. Like, okay, I get it. You don't like the Federal Reserve. You have this chart, but that chart doesn't mean anything. What do you have that really tells you what's going to happen tomorrow or next week or next month? These people that were commenting on it, they have absolutely no clue. They spend most of their time looking at a chart and listening to people on TikTok that don't teach them anything. And then they turn around and they called me ignorant. Yeah, it feels pretty good to make some money off of this. Feels pretty damn good. I shouldn't say make some money off of this because we haven't closed it yet. And they are kind of struggling here. This trend to the upside here, it's looking pretty good and consistent. Although it looks to me that it's just like we had post meta order impact because it was such a large trade that, you know, there's going to be a little bit of sloshing back and forth. So this just kind of looks like it's rebalancing to me at the moment. I'm not 100% sure. It may be some stuff going on in the spreads. I'm not 100% sure that we're getting some large meta order long or anything like that. Drinking tears and making money, right? That's what I need is a mug that says your tears. That, like, they move in on almost no volume. You're hearing the treasuries in points. That doesn't speak well for a retail trader trying to take a position in any of this, but got 5 minutes before the S&P 500 opens up. Let's see what they do. What do you guys think about the lovely down tempo music? No, ambient, the ambient. It's nice and easy. Oil is already going down, but I don't think it's going to stay there. The happier the Fed is, the faster it will come down crashing. I think what you mean to say is like the oil should be rising back up, right? Well, right now they're just at 90. Like there was a pretty good move up in oil after that news, and they've come back just like everything else. VWAP bounce trade held as usual. Yeah, you be careful with that VWAP, right? Weird stuff definitely happens at the VWAP, but you just remember that technical analysis doesn't work. I used to basically be a VWAP trader, right? Did you see the new Sam? Did they announce a new one? Like in the last day or two? Because the last one looked great, and I was like, ah, yeah. I wanted to get in on that. Oh, okay. The last one kind of had gotten to the point where it seemed like it was a viable option, but I just didn't go for it. I decided to save the money. So why do you think there's this huge profit taking before the open? Last time you said if someone wanted to exit his position, so you should wait for the open because of the far higher volume. Well, in the S&P 500, that's not really true in the treasuries, right? I've never noticed the liquidity conditions to change all that much when the S&P 500 opens in the treasuries. But in the S&P 500, you know, it came up. They just kind of been sitting there. We're getting a little bit of a buy going in here into the open though. I'm not sure if we can call what's going on in the S&P 500 profit taking, to be honest with you. Maybe. I mean, that price is just a distinct distraction. Inflation up, down, sideways doesn't matter. What matters is we are too dependent on finite resources. I don't see how that immediately leads to orders here. Did we flatten a little bit there? No, the spread is still going up. So what's happening at the moment is that the yield curve is still steepening, but it's been steepening by them selling the 30, essentially, right? Which is kind of ironic. They're coming back there. I mean, there's maybe a little bit of a hole at 03. Maybe. I suspect that we could have a little bit of a latent liquidity hole at 03, but the tape is so slippery here that it makes it really hard to make those kinds of determinations right now. We should remember that there was some big old transactions here at 14, and there's still some big orders up in here too, right? So here's an interesting question. Will the S&P 500 futures open above 4,200? Now it looks like maybe not. So I was looking at it, look like they might actually be there right at the open, but no, they didn't. But here's the open. Probably going to see some buying on the open. Tepid, but it's there. Rumors and leaks suggest a lot of improvements cross-board, including camera screen enhancements. The Galaxy Z Flip 4, meanwhile, looks to continue its predecessor's legacy by offering a unique clamshell form factor that has a broad appeal. Hopefully the same affordable price tag as... It was not affordable, but okay. Oh, geez, how much do we come back here? Oh, okay, we're back where we were. Okay, so the action in the S&P 500 not as aggressive as I thought it would be. Yeah. Okay. These are moving again. Like, look at this. So the ticket 03, 31 contracts to take it. So they really are sliding around. I should keep this up. 0.12. The basis has actually increased. So 1.4 would make sense, not 1.5, but okay. It's not too far out of line, so I think we leave it alone. See if maybe they move back into the liquidity hole, right? Okay. Yeah, there it does appear to be a hole there at 0.3. Really low latent liquidity, but then they trade into it and there's some icebergs there. That's interesting. Very slippery though. Oh, very slippery. Wow. Okay, so a little bit of a sell came through here in the S&P 500. So the cumulative deltas that I'm seeing in the S&P 500 are a little bit stronger here. Maybe that could be profit taking. Sure. But the amount of activity that I'm seeing in ES is significantly less than I expected. So I'm not sure if I can actually make any too big of a conclusion off of that. You gonna go long one, ES? So if I had turned around and I had bought the S&P 500 instead of this, what would I be at right now? So let's say that you got 4140. So you could have made 60 points. So that would have been $300. Not bad. Good little rise here. Not quite, at least in the 10-year, not quite past the last pivot. 07.5. Oh wow, that last little spike up was again a lot further than I thought it was. Okay, so the White House spokesperson is saying that gasoline prices will continue to come down. Like, I can't imagine how arrogant you'd have to be to say something like that with that much confidence. You're a politician. Spokesperson to a politician. Yeah, how the hell would they know? Exactly. You're just saying what you want. You don't know if it's going to go up or down. You just know that it going down would be good for you, and so you're telling people that that's what's going to happen. The thing that bothers me about politics these days is, like, of course, politicians always play these games with people, right? Donald Trump, he tried to play that game. You know, there was a lot of opposition to him. People were constantly calling him out on it, and so he was maybe not as good at it as you otherwise could be as a politician. Although, just like the interpersonal skills that he had for doing it, he was really good at it, right? Joe Biden doesn't seem to be good at it at all. None of us believe him, but he seems to get away with it, and he gets away with it so often that they've just become so brazen about it, you know? And that's the thing that bothers me is that the politicians are just getting so brazen about how they manipulate public opinion. Yeah, they had people fact checking Trump full time. It's people on the Democrat side know that the media will cover for them, and so they just say whatever they want now. Or whatever they think will help them the most. It's almost psychopathic, right? Because a psychopath, he'll do whatever it is that he thinks will help him in the moment, and he doesn't think long term, right? Remember the pounce on fire counter or whatever it was? I wish we had one for Biden or any politician. Yeah, well, Biden's pants on fire counter is probably not as high simply because Biden doesn't make as many comments or as many statements like that. But I really do feel like that when Biden fibs, it's in many ways worse. Because Biden is fibbed about things that could cause a person to go and make a decision that would be objectively against what would be good for them, right? So like here with oil, he says oil prices will continue to go down. So if you're listening to the White House, then the correct trade right now is to go short oil futures, right? Well, that could end very, very badly for you. And that in that respect, that's where I'm kind of saying, like, right, they're lying about things that could affect people's decisions. Whereas Donald Trump's lies were just kind of like just to kind of try and pump his ego, and were usually over trivial things. I think he will be a good politician. Alex Jones, no. He'd be a terrible politician. Good entertainer. Okay, that's looking... Oh, I think I'd be more interested in what the 5-year does here than the 10-year. And the 5-year, the last, it was 282. But... Tobias, how are you doing? Did you make money today? I hope so. I think I would like to see here in the 10-year at least 14 again. I'd like to see them return back to those prices where there was some really big transactions, right? You were long before the news then on ES? Hmm. The lie impacts more than trading. They basically told people they can afford that pickup or they can stop stock. Yeah. I was just giving an easy example, but yeah, you're totally right. You're totally right. Like, that's what bothers me about it. Like Donald Trump largely tried to manipulate people's opinions of him and his policies, but Joe Biden seems to be trying to manipulate the actual behavior and decisions that people make. I shouldn't say Joe Biden because I don't think it's necessarily him. And I don't think that they necessarily even realize that, like, oh, I shouldn't make a prediction about what oil is going to do because people might make decisions on that. Okay, there's a little bit of a stop run there when they passed the pivot. Did you see that? What just happened right there is exactly why I would not recommend price action trading. There's all these retail traders out there doing it, and it doesn't actually have any edge. And so when you go through those pivots, they just get blown out. And you'd be pretty mad if that's where they pivot and they turn back down, right? Stopped out right at the exact spot to get back in or whatever. Do you have any tricks on how to improve the NinjaTrader performance? My server is not that strong and I don't want to upgrade. So I would depend very much on where you're having performance problems, right? But I think that the mistake that I've run into with NinjaTrader the most is that the way that the application is, you just get tempted to add more and more stuff, right? And eventually you're going to add more things than your computer can handle, right? So like if your machine is regularly going over 1,000 megabytes of memory for NinjaTrader, that might be a sign that you might want to slim down some of your charts, right? And so you can do things like, you know, don't use tick replay if you don't absolutely have to, for instance. You know, don't load more data on the chart than you actually need, right? Like if you have something like you're saying, my server is not that strong, that kind of suggests to me that you're doing like automated trading on a virtual machine, right? So if it's that chart is there just for it to run a strategy off of that chart, and that strategy is an intraday strategy, why would you load more than 2 or 3 days worth of data, right? So going in and just kind of making sure that every chart is using the minimum amount of resources that you need and not putting things out there that you don't really actually use helps the performance. So I did that with this workspace, and I've had some problems recently, but that time with the CPI, that was just about the craziest move you're ever going to get, and the workspace handled it just fine. So okay, so the 5-year is running into a large order here. Already traded 1,000. Okay, you know, 2,500. Just swept right through it. Buyers are there, I guess. Turn off all the Windows Pretty stuff. If it's a really, yeah, on a virtual machine, you know, if it's really resource hampered, that sort of thing could make a difference. Yeah, kind of depends on what version of Windows you're using, it doesn't it? I liked what the 5-year did there, but they pulled back. '30-year did get dragged with it. 30-year coming back to 3%. Can you believe in all of this that the 2-year yield is higher than the 30-year yield? Really is kind of like, what is going on? FX Macro Fed continues to target the most lagging indicator possible, employment. Is it the most lagging indicator possible? I don't know. Dude, like when I come and I look at the yield curve right now, on just like I'm looking at the benchmark yields on TradeWeb, it's just all sorts of out of whack everywhere. Like the 2-year, they're at 3.11, but then the 3-year is at 3.05. And then the 5-year is at 2.8. It's just kind of like, what? What the heck? Or here's another way of thinking about it. When the Federal Reserve was coming out and being really, really hawkish, it was like the 10-year yield should be way higher than it is. But now that they've kind of switched around and we think that everything's going to go down, the 10-year is maybe okay and everything else is way too high. Right? Like, in terms of spreads, there is still... I got to be careful about how I say this, okay? Because the markets don't necessarily react to fundamentals. But what the fundamentals should say the curve should be right now is very, very different from what it actually is. And it could be very, very different from what the future orders hold. We'll see. But it does suggest that there could still be some opportunities here in the treasuries to take a swing trade, right? Well, I think we should change things over to lo-fi. How about that? Okay, so a little earlier we were saying that the S&P 500 was selling off. That was true. They sold off by about 10 points, which in the larger scheme of things isn't too big, but now they're kind of edging back up towards that 4200 area again. You don't think the down tempo lends itself to this? Well, I'm kind of trying to set the mood. I'm trying to get you to relax, right? The part of the problem, though, is that the drum and bass stream beats one is a little bit too short. There's not enough songs on it. Like lo-fi here is 12 hours. Drum and bass is 1 hour. Basically, we listen to the whole playlist twice every stream when we're doing drum and bass. Yeah, lo-fi is a nice medium. Yeah, I'm like, it's still upbeat, but it's not like distracting. Yeah. One of the things that can happen to me is that I'll listen to music that I like and that distracts my focus. Some of those tunes are stuck in my head. There's one or two of them that are really good, huh? And there's a couple of them that have a lovely Reese in them as well. I can tell that he's not doing it the way that I would do it. The way that I would do it is a little bit more, you know, like with a Moog filter and everything, a little bit more genuine to what it is. But because he's constructing it manually, probably, he's got his own feel to it, and it really is quite nice. I don't know why I've been thinking a lot about production stuff lately. I think it's because YouTube keeps recommending me videos and I watch them. Oh my gosh, being on a music producer TikTok is the worst sometimes, because like every other video is like, here's how to automate the release on your hit hats with the LFO, and everybody's showing that trick. It's like, okay, every house artist knows you want to differentiate your hats a little bit. But then on the other side, there's so much to learn, so you do learn stuff. You never liked Reese? What? Oh. You like the 808 kind of sound? Yeah. I do like me a good hip hop 808 bass line sort of a thing, right? But I love my sidechained Reese. Or any kind of sidechain bass like that. That's my favorite kind of sound. Or like more of the Dominator going on to like leads. I just think the Dominator is the coolest sound, man. It's hard to pull off in a lot of sounds. It's kind of surprising to me that there was an era where like every song had that, because these days it feels like only a few songs can really pull it off well. But when it's in there, man, like oh yeah, that gets me going. Like what is that Steve Aoki track with that's got the Dominator going on? Steve Aoki and the Bloody Beat Roots Warp 1.6. Oh, that is my hype song. You know, if I need to like get hype before a lift or something, that's what I play, man. That song just makes me want to rage. So good. But we would play that, man. When I was DJing more, there was a couple of shows where they were just kind of small. They were supposed to be small shows that ended up being like way bigger than they were supposed to be. And I remember this one at this little club that, oh man, I put that song on and they were like almost moshing. It was great. Oh, that's a good song. Good song. And it's a nice and loud one too. There's this interesting thing going on in the music producer world, where basically these guys have figured out that you can come in and like put clippers on all of your individual tracks, and while it does introduce distortion into it, it's like it's not enough to really notice, or for the audience to really notice, and like you just get so much loudness out of it. So like the traditional producers are all like, this is really bad. Like, you're introducing all this aliasing into your sound and everything, and you do that across a bunch of different tracks and everything, like it adds up and everything, right? No, they're totally right. They're totally right. But these in EDM, they get away with it, and it's like it makes it louder, so why not? Right? And so they're just doing it. And so there's this big argument over kind of the more traditional guys versus this new zero to clip, where basically you get your loudness out of the mix rather than the master. And it's a really interesting debate. I mean, I think that the guys that have the more traditional approach are generally more correct, but if you go and you do the naughty things, there are some real benefits to them, right? So if you know how to do it intelligently, it can really work to your advantage. So glad I bought a strangle instead of just puts. Oh, I'm surprised that you'd be doing super well off of a strangle. I would have thought that the spread would have been too high. Barry Corson versus Armin van Buren Brute. I'm not sure I recognize it. I think I do know this track, and as soon as I watch it, I'm gonna be like, oh yeah, that one. Hold on. So I'm gonna pause this for a second. I'm gonna listen. Well, in terms of the treasuries, we did kind of get like a stop out of sorts, right? But then since then, they've just kind of been chilling at 120.09 or so. And the intro's not. Yeah, I do recognize the song. That's the kind of Ferry Corsten that I'm not super into, though, to be honest with you. Like, the thing is I liked edgy Ferry Corsten, like punk, and I think Rock Your Body is maybe a little bit along those lines as well. I think that Beautiful kind of had that attitude to it. There's this other side of Ferry Corsten, which is like Candy Mountain, cotton candy, fluffy, you know, and then you take that fluffy sound and you try and make it sound epic and aggressive, and it just doesn't work for me. So like the Goriella. I look back at Goriella and I'm like, yeah, Tiesto was right. It was time to move on from that. right? Because the whole thing was some dance music history for you. Reading between the lines, here's my take on what happened in dance music history, okay? In 1999, trance was the big thing. It had already kind of crashed, but it was still popular on the internet and in popular culture. And it just kept getting more and more epic. And then the two biggest DJs, essentially, producers, Barry Corsten and Tiesto, two Dutch guys, got together and they made Goriella. And all of the trance heads just go absolutely batty for Goriella. Like 2 or 3 years ago, Barry Corsten made some new Goriella tracks, and they thought that they were so great. So they put out like 2 or 3 tracks on Goriella, and then Tiesto said, "I'm not into this sound anymore," and left. And Barry Corsten still liked it, so Barry Corsten kept doing that sort of stuff. And Tiesto kind of went more progressive, and then eventually Tiesto going progressive turned into house. Turned him into going into electro house, and that's how he's become like a house DJ now, basically. And Barry Corsten stayed over in trance and doing the cheesy stuff. And I think that Tiesto was right. Well, I mean, really what ended up bearing out was that Tiesto was right. Tiesto was good at reading what the trends were, and that sound was played out. And Barry Corsten was just dedicated to that one sound that he liked, right? And so that's why Tiesto is still like one of the top DJs, and Barry Corsten is, in trance, where people are still kind of trance is kind of dying to some extent. I mean, it'll never die. I still love it, but in terms of popularity, it's a lot harder to get an all trance show these days, right? Compared to house. House has continued to stay strong. I think that a large part of the reason why house continued to stay strong and trance didn't evolve was because of guys like Ferry, where the trance heads had this sound that they liked and they didn't want to see that sound change, whereas the house heads, they don't give a crap. Like, most of them are kids that just discovered this music last year, and so whatever is new is the hot thing, and they can go from drastically different sounds from year to year and still love it. And so that genre is able to continue to be fresh, and trance is still where it was 22 years ago, right? That's my take on the history. A little large order there at 09. That's interesting. Is somebody trying to saying, okay, guys, it's time to move away from here now? House hum on YouTube? Oh, I'm not sure. So here's what's you want to hear about someone I found on YouTube recently. Maybe you've heard about them, because I guess there's a little bit of controversy around them, although I don't know the full story. It's really hard to piece from the comments on the internet what was really going on. But Sewer Slut, spelt with a V. Oh my gosh. So like, the person that made this music is like got something wrong with them, okay? Because all of the thumbnails and the titles suggest that he's suicidal, or she. I forget which one he is, but they are. But anyways, all of their videos and thumbnails suggest that they're like suicidal. And I guess they had a friend that committed suicide, and so a lot of their last album was dedicated to that person, and they said, I'm not going to make any more of this stuff. And here's the thing, don't play that stuff in a club. Like, I wouldn't even play that stuff in your car. Doesn't sound very good on a car, okay? But when you're sitting at your computer on headphones, that is good stuff. Oh my gosh, it is so good. You can actually, I think that you might still get DMCA notices if you try and use the track, but they're totally like, as long as you give me, as long as you acknowledge that it's by me, you can use it in whatever you want. And it is basically like drum step sort of stuff. Like it's a drum and bass, really, really fast drum and bass with extremely pretty uplifting angels choir sort of stuff top end. Yep, underground jungle sound. Yeah, I that's what I would call it. Is like uplifting jungle or something. Oh, it's so good. It's so good. And they have this one song that's like 15 minutes long, and you'd think like, oh, that's dumb, right? And but it's really like 5 songs combined, and there's this one riff in it that is just so cool. It is such a cool Sewer Sled is great stuff. Yeah, it's jungle without the raga. I like the raga too, though. Man, like we were talking earlier about Warp 1.6, that really makes me want to rage. The other thing that makes me want to rage is just a really good British drum and bass rap. Oh yeah. You know? That's good stuff. A good little trend emerged here in the treasuries, taking us up another step. The 2-year is almost back to where it was. I still have the Zero Hedge front page open, and like I'm looking at the stories from before the CPI. One of the stories they had was an out of cycle Fed hike might be warranted if CPI doesn't behave. Okay, but now that it did behave, now what do you do? So it could be so interesting to listen to. Okay, let's read this story right here. Wall Street reacts to today's huge CPI miss. For a look at just how big of a surprise today's CPI miss, which we said would be a miss in our preview. Oh, did they say that? Maybe that's where I got it from. I had an inkling that it was going to be a miss. Okay. Look no further than the market, where it's a sea of red with every asset class soaring. And where the plight of the shorts, which these days is most hedge funds, can be summarized with one image, and it shows a picture of a car crash. Why this tremendous market reaction? When one strips away the rhetoric, all we have seen is 1 month's drop in energy prices, which will only rise now that the market is starting to anticipate a Fed pivot. Perhaps, yes. Bloomberg asks a similar question, namely, what's behind the surprising slowdown in July, and notes that according to a new Bloomberg economics model, the U.S. inflation decomposes into 4 factors: supply, demand, energy prices, and monetary policy. The model found that the lower energy costs and slightly tighter Fed stance were the main driver of the deceleration to 8.5% last month. That's one model. I don't know how much credence I would put into that. At the same time, sizzling demand paired with supply constraints continue to put upward pressure on inflation. With these last 2 factors harder to contain, Bloomberg writes that the Fed has a tough task ahead of it and will likely need to be more hawkish than currently expected. Or in other words, echoing what we said yesterday when we warned that a miss will make Powell's life extremely hard. Why? Well, here's a good thread summary from Dan Alpert. The answer is a headline 0 month-over-month core spot 3. The end is nigh. That headline reading was with food up 1.1% in July, offset by energy falling negative 4.9% on the month. Core commodities only rises spot 2 on the month as supply chains reopen and production inventories build to backlog. On the services side, price rise falls to spot 4, driven by a negative 0.5 decline in transportation services in July. The shelter rise moderates a bit, 2.5 on the back of a 2.7 monthly decline in lodging, which fell for the second straight month after pandemic reopening demand and supply squeezes. Rent and owner's equivalent rent of money primary residences, the primary drivers of core inflation, remain high at spot 7 and spot 6 month over month respectively, but that is lagging data, and the housing market has already been thrown into decline by Federal Reserve interest rate hikes and building oversupply. Correct. Housing is these days the principal channel through which Fed monetary policy operates. While Fed hikes are not responsible for inflation slowing in this report, the prior inflation itself, the cure for higher prices, is higher prices. Opening supply chains and lower global energy prices is what they say, contradicting that model earlier. Higher interest rates will have a huge impact on housing and CPI soon. In October of last year, before Omicron and the Ukraine war disturbed rising metrics around the world, I noted that inflation would be a first half of 2022 story. Yet here we are, While these month-over-month sectoral declines will not be repeated every month, we will see housing costs gradually subside for sure, core goods stabilize, and consumer purchases driven most by pandemic reopening revenge spending. See material price retrenchment as inventories rebuild. The only real wild cards are exogenous, not demand-driven supply risks associated with oil and gas and their bleed-over impact on food costs. All in all, this report is as I expected, and the trend is reorienting itself. We are at the point where the annual year-over-year CPI figures cease to have meaning. Prices are what they are now, as are wages and incomes. The only issue is where they go in the future, and that is not a function of expectations. It is the discipline of supply and demand. While we are confident those who don't actually have a corporate charge card will disagree with Jan's cheerful take on today's inflation print, there was another reason for the market's euphoric reaction. The chart below from Bloomberg shows the breadth of inflation. The July reading of 71.8 is saying that 71.8% of the CPI basket is increasing in price at more than a 4% on an annualized basis from the month-over-month data, which represents relief for the Fed after June's high of 74.8. Try the Angel Fist one. Oh, okay, yeah. I'll look at that in a second. Okay, so Jan Hatzius, Goldman Sachs chief economist, core CPI rose by 0.31 month over month, below expectations in the slowest month pace since September. Declines in airfares and used car prices contributed to the slowdown, and we also note a sequentially slower but still elevated pace of shelter inflation. I don't know if there's actually anything else. I'm not going to read all of these guys. What the other guy was saying was interesting, but the rest of this is kind of like... Still not back to 14, though. 14 is kind of where I think it's interesting. Okay, the two year is pushing though. 2 year is pushing a little bit better here. Yeah, let me put it on. Oh, sorry. Impact. Sounds like dubstep. Oh, and that's hard style. I'm okay with the hard style, but I like more of a techno oriented hard style. This is okay. I'd have to say that for the style, that's about the best that you could do it, but I think that the issue that you get when your BPM becomes too high is that the BPM becomes such a overwhelming part of the composition that there's nothing you can do to differentiate yourself. Everything that you do to differentiate yourself just gets overlooked by viewers, right? Whatever you can bench press, you will be able to double the press weight. I'm sure. I've been having a hard time working out lately. Like, well, I skipped. So sometimes if I'm having trouble with my gut, I'll skip. Because if I'm having trouble with that and then I work out, I will just like burn myself out so bad. And my whole system will just kind of be for like a day or two. Which isn't good for trading. So I kind of avoid doing that. Which means that I haven't really been able to really get into it and get heavy and get myself back up to like peak form in a while now. And I kind of feel bad about it, but at the same time, I'm like, well, but I mean, my goal is just to be active, and I think that I'm doing an okay job at that. So I shouldn't be getting too mad at myself that I'm not like peak form, because it's not like I'm competitive at it or anything. Or I mean, when I mean competitive at it, I mean, don't mean that I don't try and be competitive at it. I mean that, and I just don't have the genes to be a top weightlifter, right? Wonder if I've heard those artists before. No, for like more of a hard style thing, I was always into like Diabolic. But I really like some of the like the East style stuff, is what I think you'd call it. I mean, there hasn't been very much over the last year, but man, those guys in Eastern Europe and Ukraine, Romania and stuff, they make some good dark stuff, man. Especially on the techno side. Oh yeah. Like I think they were the ones that first really started to do the techno rumble sort of a thing, right? It's a good little rise there, but it's just kind of been going sideways. I think there were some large transactions here in the 5-year. I didn't mark where they were, so I don't remember exactly what price they happened at, but it kind of seems like after that happened that the treasury market has kind of been a little sideways. So need to come back over to Twitter. Have I missed anything on Twitter here? You know, it seems to me that they've been a little quiet on Twitter today. Yeah. Jim Iorio, the Inflation Reduction Act worked faster than any law in history. Wow, yeah. Well, I'm betting you that on the Democrat side, that like they're talking to their economists, and their economists are probably saying it looks like inflation is moderating. I think that could have been a strategic call that Democrats made, that inflation was going to get better. But we'll see. That was a little bit of a drop there. Rejection of the tops in ES. Yeah, well, I'm not even sure I can call it that, because to be honest, I've never really seen like an aggressive take anywhere in there, right? It got up to those highs. It was like everybody was fine with it. Nobody wanted to do anything. That to me isn't necessarily rejection. You know what I mean? Not that it matters. But what I think you might see here in the S&P 500 is them go like, well, okay, if the buyers aren't going to go for it, then let's have the sellers have their say. Yeah. The immediate market reactions to better than consensus forecast inflation, higher stocks, lower yields, less curve inversion, etc., illustrate in both scale and scope the extent to which the economics and finance are aligned when it comes to the importance of controlling inflation, says Mohammed El Arian. Oh, who was that? Signs of inflation may be moderating? That was a Fed speaker. Might be responsible for a little bit of a spike there in the treasuries. Didn't see it here on Twitter yet. I don't know who it was. Oh, that was Biden said that. Biden said there are hints that inflation may be slowing. Gotcha. As he's signing off on documents to admit Finland and Sweden to NATO, hailing it as a watershed moment for the transatlantic alliance. gonna drop more if not getting above 120.12? I don't know. I kind of feel like with this market that it's like they made the big move at the beginning, and like it's such a big move that now that things have balanced back out, that you know they're likely to just middle around in the middle, and maybe later, like for instance after Europe closes, maybe then you'll see further moves. Maybe the 2-year has to wait until tomorrow. We'll see. That first hour went by was really slow and I really enjoyed it, and this last hour was actually relatively quick. They can also consolidate at higher levels. I'm not sure, in my opinion, we're pretty elevated in this rally. Yeah, like the whole point is that like the change in fundamentals was so large and the initial impulse was so large that it makes it really difficult to predict the short-term action anywhere else, because it just ends up being so slippery, right? Like here we have a rare, usually the shorter term your prediction is, the more accurate you can be, right? But we have a situation here where our ability to predict where it might be a few days from now is greater than our ability to predict where it will be in 5 to 30 minutes from now. You get what I'm saying? Like pretty good chance that the 2-year yield is back to 3% soon. But will it happen today? Probably not. I don't know. Nah, I don't know about that one. Okay, so I'm seeing some people on Twitter saying that like all of the data is faked. Okay, I am suspicious about that jobs number. I don't think that the jobs market is really as strong as that number suggests. And I don't think that it's that anybody is lying to us per se. It's just not an accurate picture is all. But if I was Joe Biden and I was going to fake data, this is not the data that I would have faked, right? I would have been faking data like a long time ago when it was really starting to hurt me. So I think that this really is like, you know, they were saying inflation is going to peak here. They were like 2 months early. That's really what's going on here. Like in China. No. The thing is that there are some things that you can do in some of these economic numbers to kind of massage the numbers, but not really. I mean, the market understands, the analysts understand how these numbers are generated really well. So President Biden is tweeting, just in case any of you had any illusions that Biden doesn't actually write any of those tweets. Because he's still on TV, so there's no way that it was actually him. Well, this decline here is a little bit stronger in ES, yeah. 20 points from the highs, basically. Huge spike in selling delta at 1016. Well, I'm wondering, I don't have any information suggesting where the options are at right now, but the way that the S&P 500 is behaving, I have to wonder if the market is not long gamma above 4,200. And that's kind of causing it to act as the resistance, right? The way that the treasuries move here off on these is a little weird, because you're basically, it's like it'll go sideways. Come on. It'll go sideways, and then there'll be a little spike up that comes back, and then sideways, the spike can go down, and then maybe a little bit up, and then sideways, spike. It's just kind of showing me signs of like still very poor liquidity. There is like a 1500s right here at 11 and 11.5. It might be interesting to see how it behaves if they get through those. I don't think that 3,000 contract should be too hard for them to get right now, but by the way, in the 10-year, ever since that low pivot around 120 even, the cumulative delta has been all long in the 10-year. Not quite so in the other ones, but in the 10-year, it's been a very consistent uptrend. And pretty soon, if they have another move higher, they're going to be at highs of the day in cumulative delta. So, yeah, I wish. Don't you have spot gamma? No. Put selling delta at 1016. But at which strike price? Let's just recenter our DOMs here so that I can remember that it was 11.5 and 12. Oh, you got the other one. I get you. That's right. It's kind of weird to me on Twitter sometimes when it's like things get quiet and it's only the crypto people that are talking. The crypto and anti-crypto are always yapping, but the people that I like to listen to, not so chatty today. They must be too busy trading. IEF is already over 10:15 a.m. Looks like maybe ZN has to catch up or vice versa. The 2 and the 5 continue to show a relatively steady march up, but it's a super slow mover, right? I think you can kind of see here, like there was, this is where the volume was. So once you get above this 10.5, there appears to be more sell side liquidity. They appear to be slowly eating away at it, but we'll see. If I was a big player and I really wanted to come through and buy treasuries, I wouldn't be feeling any kind of pressure to be super aggressive or anything. I would just be slowly nibbling away at the offers, right? Okay. So do you see there was a little bit more selling in the 10-year and actually a little bit of flattening there, but the buyers were more than willing to take some of it. Do you think we get a last spike in the treasuries until the end of this year, or do you think yields will fall because of this safe haven recession trades? I don't think I'm very good necessarily at trying to make a prediction that's more than, a few days ahead. But from what you're saying right there, that just sounds a little bit too aggressive to me. Like what I'm seeing right now kind of suggests to me that things are going to moderate, right? So yeah, the treasury yields are going to have to come down a bit, especially this 2-year. Okay, like I'm really feeling 3% or below in the 2-year, but we'll see. Okay, I'm really feeling 3% or below in the 2-year, and the yield curve is going to have to, unkink itself, right? Okay, but after they do all of that, it kind of feels to me like the treasuries are fairly priced and that we would need a significant change in the outlook to see a big move in them. So to say like we'll get a spike into the end of the year or yields will collapse because of a recession trade, it doesn't to me at this moment doesn't feel like either of those two things need to happen. I think that the yield curve balances itself out, and then everything's hunky dory at that point. You know what I mean? So we'll see. We'll see. This market continues to surprise us, right? Like it feels to me like that's the thing I'm gonna remember about this market, right? Is at every step of the way, it did the unexpected thing. At almost every step, the market got surprised by what happened, right? Hard to trade. But you know what? I think that part of what's causing that is that too much of the trading out there has become technical in nature, right? So this gasoline inventory, so hold on a second. So there was another, it looked like it was a good little breakout there, and then they got shoved back into the range. So this, what's going on in the S&P 500? Really great example. S&P 500 has been on a pretty good rally. So a lot of people are going to come out and say, look, see, the chart knew, the market knew ahead of time that these jobs numbers and CPI numbers and everything were going to be good. The market knows ahead of time. I don't think that that's what happened. I think that you have stock buybacks going on and a bunch of fund rebalancing and those sorts of forces. They're really strong and are able to push the market up even when all of the speculators are feeling negative. And then this news comes along and practically everybody that was trading was like kind of surprised by it. I think that there are too many people out there relying on what happened in the past and what the price is doing to make their decisions, and they're not actually trying to predict the markets. They're not trying to actually predict the order flows, and that's why it seems like this market ends up being wrong at every turn, right? And I think that we should expect that kind of dynamic to continue to hold into the future, because what has happened is that the technical trading, like fund rebalancing and that sort of a thing, has become such a dominant part of the market because basically everybody knows now that the best thing to do is to just buy an index fund, right? And the speculators like us, there's not very many of us. And the very few that there are relying too much on charts and don't actually know what they're doing, right? So I guess that's a good position for us, but just kind of spitballing. That's kind of what I feel like is going on right now. But long story short, I don't know if they have to do anything dramatic. Looks like there is a little bit of a hole at 09 and the treasuries fell back into it. I'm still seeing a decent amount of market buying here. There's points where they're able to take out 2,000 contracts. With the way that the tape is running right now, it looks like it'll be very, very hard for them to break new highs, at least before we have to go. But the buying is still robust. Buying is robust. It's just there's probably still a lot of profit taking offers up here, right? Like there's all these 1500s and everything kind of suggests that you got a difficult road to get to a new high today. Actually, that little drop there in the treasuries is a little bit more dramatic, and it was much stronger in the 30-year. So the 10-year yields came back a good clip, but not the 2-year. So maybe another leg of flattening. I don't know. Oh, you know what's another thing that we didn't point out? Is Bitcoin just shot off of that news. Back above 2,400, just like that. Well, everything shot up, right? But the market will often be mispriced, and we want to catch these discrepancies in the hope of back pressures to our trade with the market catching up to you, not the other way around. To focus on taking the initial entry with as little risk as possible is important. Right. So like the thing is that what I'm going to be looking for is like a fundamental mispricing in the market. But just because I see a fundamental mispricing in the market doesn't mean that I want to take a trade there, right? I want to take a trade when something happens that kind of forces the orders to go in the direction of that we want it to go from that mispricing, right? So if yields are too high here and then you get a CPI print that's really dovish, right? You're going to see a lot of buying in the treasuries and then you can write it, right? That's how you time it. There has to be a reason for the flow to come in that will set things back in balance. And as is almost always the case, every move will either be too far or not far enough. I think in the situation that we have today, I don't think that it went far enough. I think the yields have much further to go. But the way that the market liquidity is that it's just not possible for it to move to where it needs to go. Now, the difficulty with day trading it for us is picking a spot with good risk reward for it, right? Because we have a pretty good chance that the 2-year could go down another 11 basis points or so, right? But how far back is it going to pull back before that happens, right? Today I got deleted with a CFD. Well, so first of all, don't use CFDs, dude. Any solid futures broker who keeps their word on the stop loss? SL? AMP is fine. I used to use AMP. I'm using Edge Clear. But like, here's the first thing is that in terms of like what it matters with your broker, never trade anywhere even close to your margin limit, okay? Just, right? Have way more money in the account than you need to trade the number of contracts that you want. So that like, even a crazy max loss wouldn't be anywhere even close to what it would require to liquidate you, right? That's the key on there. And then if you put a stop limit out there, just make sure you putting, you know, that you know how to use the tool. But CFDs, like, you're trading against your broker with a CFD, dude. It's not like there's a reason why it's banned in the US. Don't do CFDs. I don't understand why the UK doesn't ban them. But whatever. Whatever. I thought maybe we were going to have a little bit of a slip back up to the higher end of this range here. But it just kind of looks like nothing. They're just moving. There's some trade. There's trade in here. I mean, now might be good area to try and take one tickers out, right? Because you're getting decent amounts traded at every step of the way, and the amount that's trading tends to be more than what is in the queue, so it's a little bit easier to get filled. I don't know about your ability to predict directions in here, but you know, there's a good amount of trade going through, but they're just kind of not really getting anywhere with it. And it looks like it might continue to be that way for a bit. One of the big things is always those European close, right? So might continue to be, well, sometimes after the top of the hour there, after I leave, there's another move, but it might just be like this until the London close, right? So oil had a really good jump off of the news. And then after that initial spike, it's been all down in oil. They're now down to 88.6, down from 91 at the high. So I was kind of thinking that oil could continue moving up here. It's not, which is curious. And the S&P 500, they've seen some okay sells here and there, like, yeah, 10 points. I guess that's significant, but it's pretty small compared to what happened this morning. At the moment, they're kind of headed to the upside. I am curious if they break above 4,200 today. That could be really interesting. I'm not so sure that it'll happen, though. I want to say that it's likely to happen, but I don't think I can say that. Because I'm not even sure why I feel like that it should. So whatever. Volume profile looks so busted on ES. Yeah, it's an irregular distribution so far, isn't it? Like if we come back to this one. I mean, I think that people would call it a double distribution day, but the reality is that this distribution up here is a little irregular. This does not suggest like a strong like a rotation around 4193. With the way that it's been trading, I would have expected to see a very, very smooth distribution, but it's very jagged. I guess it's not terrible, but this just all looks like noise to me. Like this looks to me like everybody that could trade it traded it off of the news, and now there's not enough market orders to overcome the liquidity that's in there, even though the fundamentals suggest that they should continue to move. And so you just get a lot of fighting around in the liquidity hole, right? So normally speaking, I would have, you know, once I see that conditions are like that, I want to be out, right? But here I have enough room to work with that I can try and hold it for when they're able to make another move. Jeez, what? Iran Revolutionary Guard member charged with a plot to murder a former U.S. National Security Advisor Bolton, says the U.S. Justice Department. Ooh. Okay, so I remember seeing a story earlier where they were saying that Iran is going to try and retaliate. Well, I guess they cut them. CFTC staff extends temporary no action letter regarding certain position aggregation requirements. Okay. Don't know what that's about. Another little push on the downside in the 10-year. I think from what I'm looking at cumulative delta, it looks like the pressure is stronger on the 30-year, but not too sure. I suppose they could rebalance lower, but they might decide that they liked that 03 range better. Although it sure was a lot of volume in here 09 once they got there. Like down in here, they weren't trading very big orders. Up in here, they were. Well, now when I see that, I don't really see like, maybe it's because the Japanese yen is pulling back a little bit. Because the Japanese yen continued pushing higher when the treasuries didn't, right? Japanese yen made higher highs and the treasuries, you know, they pulled back. They've been moving up in line with it, but not to the same extent that the Japanese yen did. Which is kind of weird, because isn't the reason that the dollar is strong is because of the higher interest rates? And like, okay, so the dollar should be getting weaker because of the lower interest rates, but then it's moving much more in the dollar than it is in the interest rates. Okay, something's going on here. Somebody wants to bid up, I think. You saw an interesting post about USD, JPY, and the VIX. Oh, well, they are somewhat in line because the JPY tends to follow the treasuries, and the treasuries tend to be a flight to safety for things. So you might see some positive correlation between the Japanese yen and VIX. Speaking of politics, did you see Biden shake Chuck Schumer's hand at a signing ceremony and forgot he tried to shake his? No, I didn't see that one. I saw a story that was like that Biden had done something stupid, but I didn't even bother reading it. That must have been what they were talking about. You know, what was the thinking about Biden? The story that I saw yesterday that was really interesting was the White House coming out and saying that they had absolutely nothing to do with and were completely surprised by Donald Trump's house being raided. Well, it's like, wait, is the White House throwing the Justice Department under the bus? What? That one was a little weird. That one was a little weird. Donald Trump's house being raided is a little weird anyways. So I'm surprised that they were doing that. it was real bad. I think we all know at this point that he's too old for the job, right? I'm not gonna say that like he's going to destroy the country because Joe Biden is crazy and whatnot, but I think it's very clear to everybody that it's too old to be president. Well, better we figure that out now, right? Kind of checking over a couple of things here. Oh, what's this? Hmm. 3K lot absorbed at 05 half. They traded through it. It's not really reacting too much to it, but maybe a little bit more pushing down here. The spread in the 2-year is still really tight for some reason. I don't know what's with that. That action probably put Trump back in office. I think people fear these actions more than some on AO. I think you're right. Well, I don't know if it put Trump back in office, but it definitely put him back on the map, didn't it? Listen, and unless they really have like a serious crime that they can charge him with, it was a dumb decision. That kind of action is just a really bad idea unless you've got something that's going to put him in jail for life. It's like, okay, you raided him. Was it worth it? Was it worth it? He got to feel good about his house being raided for one day, but then you just made him stronger. Because again, like if they had evidence of like a significant crime that could put him in jail for life, I feel like I would be hearing something about that by now. But everything that I've heard so far is just, oh yeah, there was some documents that he had and they wanted them back and they weren't going to wait for a subpoena because they thought he might destroy them. Like, that's not enough. That's not enough. So there's been a little bit of back and forth at 06. The tape is being a little bit weird here. No, Tobias, that's what Trump said it was. Trump says that the documents that he had were love letters from Kim Jong-un and other stuff that were sentimental to him, and that he already declassified, and so he should be allowed to keep. That's why he said that that's why he wasn't giving them back. Like that's the whole thing, is that if it's really just about those documents, because then you're going to go and have this court battle and they're going to argue about whether or not he should have actually had them and everything. And the public is just going to go, okay, and you raided his house over this, right? It's just a very, very, and I don't know what kind of impact it has on like Republicans versus Democrats per se, but like the Justice Department and the FBI, their reputation is just shot at this point, right? The American public isn't going to trust them now. I think that's a significant problem. I think that listen, I don't think that anybody that is in the FBI or any of, oh geez, come on, any of those 3-letter agencies are listening to me right now, but on the chance that they are, listen, these short-term political games are not worth it. You need to really seriously think about what is your purpose here. I always say that our purpose is to make society better for the next generation. Okay. So if you're in the FBI, the things that you should be doing should be about making that institution better and to better serve the needs of the American people going forward. And the worst thing that you could possibly do for the future of the FBI is to make it so that the American public doesn't trust them. So stop playing political games and do what you're supposed to be doing and fulfilling the mandate of your job rather than trying to play politics. If you wanted to play politics, you should have gone into politics. And I'm afraid that that's what these guys at the FBI and the Justice Department are doing, is they're saying, we're going to do whatever we can to support our party through our policy decisions. And you're destroying the position that you're in with that kind of reckless behavior. They're not worried because there's always jobs available at CNN. I'm trying to speak to people's higher purpose, okay? So the guy that is in charge of the FBI at the moment is a Republican person, yeah. Supposedly. I don't know, Carlos G. Like, that's the whole thing, is that it seems like it would be very, very difficult to get a subpoena or rather a search warrant to search Donald Trump's house. And yet every indicator that we have suggests that the reason that they did it was not worth that large showing. Man, so the treasuries began to reverse a little bit, but they got smacked down a bit. So this is a little interesting because I am seeing a decline in cumulative delta in the 30-year and the 5-year, not so much the 10. So let's just remember that, especially in this situation, that spreads are likely playing a significant role in why the treasuries are moving the way that they are, and that the price alone might give us all sorts of deceptive signals. But it's time for me to go. What do you guys think about the title? Markets skyrocket on inflation backs off. On inflation report. I'll just say markets skyrocket on inflation report. Fun day, guys. Fun day. I'm interested to see what the rest of the week holds for us, yeah? Because this is probably not a one-day move. In the meantime, though, I gotta get going. So, stay profitable, friends, or at least don't blow it all.